Devin Choksey joins us now, Managing Director with Choksey Securities. Devin, good morning. Thank you for joining us. Devin, let me first start with the mood point, and the mood point is that opinion has changed, but the participation has not come back. Even though everyone is positively inclined to buy Indian markets, if I map what retail investors have done and how foreign and how domestic institutional investors have moved in the month of September, it is obvious that Indians are not buying equities.
Yeah, good morning, Nikunj. Well, I think you said it all. Probably, I think people are not participating into the market. The Indian institutions having their own set of problems of collecting from the mutual fund investors. They are not getting the collections coming in. At the same time, insurance companies have their own problems to talk about on the collection of the new premium side. So I think on the institution side, I think you have, a relative structural issues within the industry itself, I think, which is troubling them. On the retail side, probably I think they have been beaten down so badly in last 3-4 years that the courage for participating into the market has, I think, gone down considerably. At the same time, I think when they look at the index, they find index expensive, and they don't find, I think, attractive propositions, I think, getting into the some of the other than index stocks. So as a result of which, I think their participation is weak. But my reading says that, Nikunj, I think this phase is bound to be there. When you have the market recovery like this, I think probably you may want to have some amount of correction taking place, and during that correction you will see gradual participation of investors into the market. I think you made a point when I think you said that some of the other than index stocks have started moving up, and that's where I think we find some selective participations already started happening into the market. Don't know, it cannot be said, I think, the full-fledged participation, but selective participation is happening into the market. I believe that in coming times you would probably see more amount of action in other than index stocks, in some of the mid-cap stocks where the quality and the fundamentals are supporting. Probably you see much better rise compared to, I think, the index stocks into those companies. So relatively confident that the time to pick up the stocks from the market, and I think buying into some of the quality names would be advantageous to the investors. I don't see the market remaining turbulent in this kind of times now. Probably I think we are going to remain in a little higher range of 56.30 to 58.30 for the time being, and with some positive news breaking out post-result announcements, maybe I think we should be seeing higher levels. But till then, I think we believe that this is the range in which market could trade.
Devin, hi, morning. What did you make of the bailout package for power discoms, and what is it that you like out of that sector?
Well, I think it has come. I think though it is quite late in the day, but it has come. And fortunately, I think all the four segments, the generation segment, the distribution segment, the capital goods segment, and the lending segment, which is NBFC and the banks, I think all of them probably, I think, will find a good amount of relief out of this. Yes, I think there are caveats attached to it that this bailout package is applicable subject to the hike in the power tariffs, and that is where I think some of the power generation companies would look forward to. In fact, in my talk with some of the generating companies, they've been reasonably confident that the power tariff hike is, I think, given, and this is going to come up in subsequent period of time. So obviously I think that is one positive aspect of it. But as I see, the maximum beneficiary out of this particular move could be some of the infrastructure, power infrastructure companies like REC and PFC, where probably I think they may have a much bigger say going forward in the business, and probably I think the NPA pressure on the balance sheet for which the stocks came down, I think they would be matter of past now. So to a greater extent, I believe that I think the eyes and focus could be on REC, PFC kind of companies. At the same time, I think we'll have to seriously look at some of the generating companies which are quoting below books, because if the power tariff starts increasing, then probably I think they will have much better business to talk about. So that's why I think some of the generating companies like Adani Power or NTPC, I think could possibly look a little better than what it is at current point of time.
So let's spend a minute and try and understand which power generator and which power utility company will gain. Do you think because of the SEB restructuring, companies like Tata Power and Adani Power will not improve, because the problem for Tata Power and Adani Power is coal linkage? B, they also have a long-term contract with SEB, so even if tariff prices they go up, they will not benefit. The companies which will benefit are essentially JSPL, Lanco, and to a large extent one would say it is going to be GMR, because those are the companies which are exposed to merchant power.
Nikunj, I believe that I think Adani Power, Tata Power, both these companies are having, I think, both the possibilities. One, of course, I think a merchant power possibility of at least 20 to 30% of the units produced, I think, for which they would have merchant power to sell in the market, so that should give them an advantage. Second thing, the PPAs are expected to get revised because of the, I think, hike in the power tariffs due to the hike in the coal prices, and that is where I think they are going to get the breather on the revenue side. On the fuel side, you are right, I think still the things have not been sorted out, but I believe that I think most of these companies have already been, I think, given assurances by the government and the agencies that I think their fuel related requirements should be taken care of. Unfortunately, between the kind of intention and the implementation, there is a time lag which is happening. But to my mind, I think both the fuel supply issue as well as the power tariff hike issue, they are coming into play. And should that be the case somewhere down the line, I think some of the generating companies like Adani Power should definitely have better say going forward.
Let's also look at power ancillary or capital goods stocks, BHEL, BGR, Crompton, Greaves. Just about everything in the power ancillary space in last 2 or 3 trading sessions in anticipation of this SEB package has appreciated. But do you think it's too naive to assume that just because state electricity boards will be restructured, the demand for capital goods will come back, and in fact traders should use the current strength in BHEL and Lanco, or for that matter in Crompton, to exit?
Well, Nikunj, I think there is no direct answer to this, but if you look at, I think, how the structuring would take place, probably you will find an answer into that. The amount of money getting released into the system due to this restructuring would enable, I think, more projects, I think, to go off the books, and probably I think they start getting into the implementation state. The current situation with most of the capital goods companies, power ancillary units, I think basically was not finding enough amount of orders for the future. And that's where I think some of the companies got derated and hammered down into the stock markets. Now, if the money is getting released into the system through this restructuring route, probably the money will get paid also in the due course of time, and these companies would start fetching the orders at the same time. So to my mind, I think it's going to be, I think, a cycle which would probably, I think, start working now, and you will see the actual results coming in little later, not immediately. There will be a lag effect, of course. To my mind, I think the lag effect could be between 2 to 4 quarters depending on a company to company. However, in some of the companies' cases, like I think one of the company which we have seen the balance sheet, a company like Jyoti Structure, where they have a large amount of receivables, I think through this restructuring package, probably I think those receivables, I think, will get reduced substantially. So I think it is case to case dependent. Earlier days, I think it used to be a problem with ABB kind of a company, wherein I think they didn't get that money coming from the state electricity board. I think had they discontinued that business, of course, but I think company like Jyoti Structure, who have got that receivable pending, probably I think they would get that money coming out. But a lot would depend on how state absorbs this particular move and how they would arrange for their finances in due course of time. But overall, I think it sounds breather for sure.
Give us some stock specific recommendations, more like high risk, high return, mid-cap ideas.
Yeah, Nikunj, I think nothing new, but I think coming straight from our list of stocks which we are recommending, one of the company I think which have been liking I think much in this kind of environment as well is Sterlite Technologies. I think it is still a stock, I think still is hovering around, I think, early 30s. So probably I think this company is looking all set for further growth. We like this company from investment point of view. The other mid-cap stock could be, I think, again, I think not a new story, but Praj Industries. Again, with the price correction in the market, this will become all the more lucrative with the cash in the balance sheet of, I mean, close to around 20 rupees. Probably, I think this becomes once again an interesting play. So these two stocks within the mid-cap baskets, I think, which could probably go well with the investment portfolio. Target for 2 years, I would call it, I think, around 100% return within 2 years time.